Hello and welcome to the What the Finance podcast, where we talk to experts about all things finance. If you get value out of this episode, please subscribe so you don't miss out on any in the future. I hope you enjoy. Thank you, Angie, for joining me today to talk about your new book, Crossing the Street, How to Make a Success of Investing in Vietnam. I just want to start by asking about what was your motivation for writing the book?
I've been in Vietnam since 2004. I came with Prudential, the lady from the UK, and I was part of the investment team to invest in private equity and capital market, etc. And in 2007, I came over to VinaCapital as the chief investment officer. And over the years, we've done a lot of investments, and our shareholders, our clientele, if you will, are folks like yourself sitting in the UK and US, Europe, and Japan. And they're always curious as to how we go about investing in Vietnam. And I think they're also more curious as to what are the challenges that we face and the issues we face. So I find myself discussing these issues and answering these types of questions on many hundreds of these roadshow trips that we do in the United States, UK, Europe. And so I thought it'd be a good idea, and then the publisher also thought it'd be a good idea if we can, put some of these thoughts on paper in a book that it can be shared with many investors at the same time. Also, the inspiration for this book was another book called Mr. China. It's a pretty famous book, actually. When I first came to Vietnam, I read this book, and I encourage all the folks on our investment team to read it. And it's sort of the guideline to show that there are many ways in which investors, or in many ways in which businesses can go wrong. And as investors, we need to be very cognizant of it. And I think in this book, Crossing the Street, it's somewhat along that same line. We share with the reader some of the challenges that we face. And we hope the reader, particularly our investment professionals as well, as they make investments, they'll think about some of these issues as they negotiate terms and think about working closer and closer with some of these businesses when they make the investment.
Yeah, perfect. And I know you mentioned in the book, but can you explain to our audience sort of why Vietnam is unique compared to other emerging markets?
Yeah, I think that's a sort of a selfish answer, really, because I am Vietnamese. I grew up in the States. I went to MIT and I worked at Dell Computers and Ernst & Young. And so I've had a very fortunate opportunity to work with multinationals in the United States and the UK. And because I am Vietnamese, I felt that the value that I can add would be significantly higher being in Vietnam than in the US or the UK. That being said, that's why myself and my wife moved to Vietnam, and we felt that our background would be very beneficial to the economy and what we could do in Vietnam. And what's also fortunate is that Vietnam has been growing quite significantly over the last 10, 20 years. 2020, a very difficult year for many. Vietnam grew at 2.9% GDP, one of the very few economies around the world that grew. This year, Vietnam is slated to grow about 6.5%, 7%. The point being is we're in an environment that we're growing about 6, 7, 8% per annum over the last 10, 15, 20 years. So it created a tremendous amount of opportunities to invest, whether it's in infrastructure, healthcare, banks, fast-moving goods. There are many opportunities to invest. And I was just talking to our team the other day. When I first came to Vietnam, there were about 26 companies on the stock market in 2004. Now there are over 750 companies listed. And the obvious question they asked is, what was the size of 26 companies? The size of 26 companies was $74 million in total, right? Today, in total, is $207 billion. So that's in a period of about 15, 16 years have gone from almost zero to $207 billion in market value. So that's a tremendous slope of growth and opportunities and wealth creation, to be honest. That's what attracted me to Vietnam. And frankly, I think in the next 5 to 10 years, it'll continue on this slope for development.
Yeah, I found that really interesting when you mentioned in the book. You know, it's basically the financial markets in Vietnam, as you said, it's only been around for 20 years. It's almost like, you know, you compare that to any other country, it's crazy. So yeah, as you said, you got that potential for the massive growth because it is so new.
Yeah. You know, it's like a chemistry experiment.
Yeah.
You actually get to participate in the chemistry experiment without all the noises from the outside, because it's an economy that's growing in its own. Right?
Yeah, definitely. It's like, you know, the JP Morgans of the 1800s or something. You're just so new. Yeah. So in the book, you joke that Vietnam it's always been called like the next big thing. So why do you think it's never really taken that next step that sort of other Asian countries have?
Well, I think in some respect it has, but the other Asian countries have taken bigger steps as time goes by. It's like we're constantly chasing this goal that's even further ahead.
Yeah.
Just take South Korea as an example. South Korea is one of the tiger economies. It's massive now. You know, not even the economy. Look at the pop culture. The pop culture in Korea is global, right? So we are chasing what Korea was doing 10, 15, 20 years ago, but they continue to move ahead. So we just continuously try to catch up. Taiwan, same thing. Singapore, my goodness, Singapore is now one of the most expensive cities in the world, right? They are a tiger economy. They weren't too different from Vietnam 20 years ago. We are chasing that dream and that goal, but again, Singapore is also moving further ahead. So that's what I mean by saying, well, we want to get there, but we aren't there because they keep moving further ahead.
Yeah. Yeah, and I guess that's what you're saying. You're just starting 20 years later than all the other countries. So yeah, it's very interesting. One thing that foreign investors may be scared off of with Vietnam is that it is a one-party state. Would you say is that a reasonable concern, or is it maybe a misconception that people have?
Yeah, I think there are many concerns within an economy like Vietnam. It's a frontier/emerging market. There are many concerns. Political system, one-party system, economic volatility, regulations, cash flow, you know, money moving in and out. There are many, many issues to worry about as investors. And I think what happens as an investor, you need to sort of prioritize what are the high risks, and then look at the return that you can earn by accepting such risks. So what I'm saying is, yes, the risks are there, and they're there in China as well, and they're there in Laos and Cambodia. But the risks that you take on, the return you get is more than enough to compensate for that. So we are people that says, okay, we want the return, but we need to understand the risk. The risk is here, but we're going to get this higher return. So, but if someday the risk is here, but the return drops, then investors, and they have the right to say so, say, well, why should I take this risk when I get much lower return? So I'm saying is, yes, the risk does exist. It's not too different from China. It's not too different from other economies that have a one-party system. But is the return there? And we've proven over time that the return is there. We just looked at our numbers. Over the last 15 years, we've delivered 18.9% IRR on all of our private equity investments. That's 64 investments in total.
Yeah, wow, that's a great performance. And yeah, I think, as you said, it's just making sure that the risk premium is enough compared to sort of other investments, isn't it? Are there any other key cultural differences that, I know you mentioned them quite a lot in the book, but are there any other key cultural differences people should be aware of when investing in Vietnam?
Yeah, there is. There's a key one, and a lot of folks have asked me to start thinking about the second book about this. The uniqueness I find in Vietnam is that women leadership is very high. Mm-hmm. The top companies in Vietnam are led by women, right? And if you look around, the percentage of let's say top 50 market cap companies led by women, the penetration is much higher than any other country I've seen. And I think it's a result of a couple of things. One, the age of these women happened to be in which, when they first got married, their husbands were part of the war. Mm. And a lot of the men during the war did not make it through. So the women have to take on the family, the leadership of the family, and lead businesses, lead whatever they have in their hand. So they become strong people. And we're talking about people in their 60s now, that's leading businesses. And the younger generation of women learn from that. They take this mentorship very seriously, and they themselves have the motivation to go up and lead as well. So it gives me a sense that women leadership has a lot of opportunity in Vietnam. They're very successful. And then on the other side of it, you have to ask the question, okay, they were given an opportunity to lead. Now, why were they successful? There are two things, right? You're given an opportunity to do something, you did it, and you became successful at it. Or you're given an opportunity to do it, but you didn't do it very well. That's too bad. So we've seen a lot of women that was given the opportunity, but they've done well. And so we started thinking through what was the uniqueness of these ladies that allowed them to do much better than their counterpart men. And we find that most of the women at the top level of leadership are very focused. They're extremely focused, right? Whereas the men, when they become successful, they become a bit defocused. They play golf. They go to parties and they tell me their golf game is great. They tell me their handicap's coming down. And I scratched my head and said, look, I'm an investor. I really don't want to hear that. I want you to focus on the business, not on the golf course, right? So what I find is Asian men and Vietnamese men as well, some, when they become successful, they tend to become defocused. And that's not what we want to do as investors. We want people who are very focused in building a business.
Yeah, definitely. I think one thing you mentioned in the book as well is it has a very entrepreneurial culture, Vietnam, because of the past. And at the time, sometimes it was the only way to survive, to actually be entrepreneurial, to be with a stand or something like that. Would you say that's really emerging now, especially?
Yeah, the different types of entrepreneurship, right? The entrepreneurship that got Vietnam going in the early days was trading. We weren't producing much, we were trading. So you were living in the UK, you may have sent television to your relative to Vietnam. And that relative could have done a few things. They could have kept the television home, they could have sold the television, or they could take the television apart and sell the units, sell the parts of the TV. Hey, that's all business, right? So that's about trading, that's what they're doing. And then over the last maybe 10 to 20 years, they begin to say, look, how about if we're able to produce the basic goods and service for the domestic economy? That's what they did, and that's what we started investing in. Now we're getting into the next phase of entrepreneurship, is how do we produce goods that we can export to the world? For example, Samsung now produces more than 50% of smartphones from Vietnam. Now, granted, the phone is produced by a South Korean company, but the units, the parts for that is being produced by Vietnamese companies, which the South Koreans were sourced from, right? So they're producing parts that are put into finished goods that are being exported globally. So the next phase of entrepreneurship is, okay, I don't want to trade anymore. We don't make a whole lot of money trading. I produce enough for the domestic economy. Now I want to produce for the world.
Yeah.
Right? So that third stage of entrepreneurship actually requires a lot of handholding from investors like us, multinationals, because when you leave the borders of Vietnam, you have to deal with banking policy, you have to deal with regulatory policy in the United States and Europe, you have to deal with the FDA, Food and Drug Administration, when you import products and foods. So you have to deal with many, many other things that you typically do not have to deal with in Vietnam. So it takes a lot of handholding, and that's where we come and say, look, we can bring in some of these international folks that have experience that can help you expand globally.
And that's one thing you mentioned in the book as well, that it has gotten better, but at the time, so a lot of the management, it wasn't as, as deep. There weren't as many people that could actually manage these companies that you're investing in. But now I think you said it's sort of expanded quite a bit, and you're getting quite a lot of good homegrown talent.
Yes, that is so important, because in private equity, one of the key legs of private equity is to take control of a business and then build it up and then take it public or sell it to a trade buyer. To take control of a business means that you have to recruit talent, leaders to run the business. And we found it very difficult over the last 5 to 10 years. And now over time, these young individuals and young managers, they've worked with multinationals in Vietnam for Prudential, Unilever, Procter & Gamble, you name it. Now they've had 10, 15 years of experience. They can leave the safety net of those desktop jobs, the multinational corporation, and move into their own entrepreneurial world and bring the experience that they have. That's the key part right now.
Yeah, perfect. So I'm going to go on to the 20 rules of investing in Vietnam that you have in the book, which I actually found was very valuable advice just looking at any company around the world, I thought. But you divided it into 4 sections. So the fundamentals, the nevers, trust but verify, and then sort of getting out. Can you expand a bit more on these rules and sort of how you came up with them?
Yeah, I think, to be honest, the rules came about because we fumbled, right? We tripped. And we scratch our head and said, well, what did we learn from that? And how do we memorize, remember it so that we don't experience it again? And so when it comes to the fundamentals, making sure that our interest is aligned with the management's interest. Make sure that when they make money, we make money. When they lose money or they feel the pain, we feel the pain. Not because when they are happy because they leak money out of the business, we feel the pain. No, that's not alignment of interest. So it comes from the fact that we have fumbled over the years. And this is what our shareholders appreciate us for, because they see that, hey, they've been through rough time. They've been through it all. They can use that knowledge and experience to make smart investments in the future. And so that's really how these rules came about. So yeah, we've seen it. We've been through it. And I think we should put it down and say, well, it's what we should do, what we should not do, what we should verify, and what we should consider when we need to exit. Because after all, we have to give money back to our shareholders after we make the investment.
Yeah, perfect. And what would you say was the hardest rule that you had to learn?
The rules would come after you've tripped. And I guess the question is, how hard did you trip, right? How painful was that trip? One of the hardest trip was that we went into a situation where we felt confident about building a proper hotel. And by taking on that effort, we underestimated the costs, we underestimated the time, we underestimated the regulatory process to get things approved to build a 5-star hotel. Okay, so obviously we paid dearly for the expenses that we paid for the hotel. And that, to me, from a monetary perspective, was one in which you said, look, it's probably not a good idea to go build a hotel or even a hospital if you don't have a lot of, just stay away from that. Let someone else do it. And it's probably cheaper to buy it back from them, because typically most buildings and hotels in the world, the person who built it, they want to make it really extravagant, but by the time they sell it, they're going to sell it below book value, right? I don't think we were any different. We thought the same way. We were going to build it. We're going to do it very nice. At the end of the day, it was an overcost.
Yeah, and I found that interesting. One of the stories is the hospital you built as well. And then just because of the process, how long it took to build, there was new equipment needed. Obviously, inflation massively increased. And I guess that was a risk in especially the early 2010s, that there was high inflation.
Yeah. The issue with that hospital is that not only inflation, it was the machines that we approved at the beginning, yet weren't available 3 years later.
Yeah.
And then the Ministry of Health started to increase the standards in which they want the hospital to operate. And so you have to make changes to the operating theater or the MRI room. And so you made the design, you start building to design, and then lo and behold, when it came to taking the equipment from GE or where have you, Mitsubishi, so well, that version no longer exists. Here's the newer version, but we have to refit the room.
Yeah.
Right. So anyway, we learned from that. Next time around, or if there is a next time around, we would build the room in a more in a generic model rather than going to the details.
Specifics, yeah. Many of the businesses you've recently invested in as well. I know you've invested in a healthcare company and a confectionery company. They're actually market leaders in the industry. So is this another major element of your investment strategy? You focus on trying to find the market leaders?
Yeah, what we do, I think more importantly, is we step back and we look at the sectors that benefit from the growth of the domestic economy. When we're saying GDP is growing 6 or 7%, we're talking about the domestic economy growing. That really means the wealth of individual is growing. The GDP in general for each individual in Vietnam is about 2,500 to 3,500 per year. That's growing. So that means people are getting wealthier and wealthier. That means they're going to want basic things like medical services, banking, property, food and beverage, things like that. So that gives us a sense of these are the basic sectors we want to focus on. So then we go into the sector, we think to ourselves, okay, we have two choices really. We want to find the best player in that company, that sector, we go with it. By doing that, we have to be confident that that best player will win out all of the other players in the long run, right? You can be the top player, but the number one, number two coming up will eat your lunch, and that is not interesting, right? So we have to be very confident that they will take it for the long run. The second option we have is to look at a company that's way down the list, that needs a lot of help, but have potential. So an example is the steel company we invest in, the largest steel company today. We invested in this company called HPG in 2008, when it's about $400 or $500 million in value. We put $50 million in it. They were bringing in scrap metals, cars from the US, from Europe. They melted down and they created construction steel. Everybody was doing that. And they were the 11th player. They weren't even close to the top three, 11th player. We put money in, we gave them the ability to have a fully integrated steel complex. Fully integrated, that means they source natural resources. That's coke and iron to make steel. So the end product actually costs much, much less than the product that came out from scrap metal. So wind the clock up today, because of their ability to deliver cheaper steel at a same quality, they are now the number one player in Vietnam. They've gone from 2 million in capacity, 2 million tons, to 8 million tons of capacity today. They are the second company in Vietnam to surpass the $1 billion profit after tax mark. That'll happen this year. Okay, so that over a period of roughly 12, 13 years, they've gone from a $400 or $500 million company to a $10 billion company today. That's what we do. So we find these lower echelon, lower down the line, but we find that, okay, the management's good, they have potential, let's invest in them and let's watch them become number one. That's where we get the value.
Yeah, perfect. And is that steel mainly for sort of domestic use, or is it for exporting as well?
They export as well, but as you can imagine, at 8 million tons, you don't have a whole lot to export. Right? Yeah. They have about a 33, 34% market share in Vietnam. They still have a lot of room in Vietnam to grow as well.
Yeah, definitely. And I think there was something interesting in the book that a lot of people see Vietnam sort of as a successor for China in terms of production and export. But you said that one of your rules is you don't really invest in export-driven or commodity companies. Can you explain a bit more about that, please?
Yeah, we found out the hard way many, many years ago when we looked at a couple of furniture businesses. They were taking orders from the US and Europe to produce furniture in Vietnam, whether it's indoor or outdoor furniture. And effectively, they were producing the goods for export to the European nations and the US. And what we found out was the working capital for these businesses is extremely high. You have the finished goods, you have the raw material coming in, you have sitting in the factory, work in process, finished goods, and then they get shipped out to Europe or the United States. And then they don't pay you immediately, they give you an accounts receivable. That's working capital. So it just bloated up. These export-driven businesses, their working capital got really, really big. The problem is a country like Vietnam, the cost of capital is really high. The cost of borrowing in Vietnam right now is 8, 9, 10%. The cost of borrowing for you folks in Europe and the UK is like 1, 2, 3%. So how can I afford to be a bank effectively? I'm a banker. I'm a banker that put money in working capital, and it just eats into my net profit margin. So from that angle, it was never attractive. The second is we find that these businesses, when they're small, they're okay. But when they become bigger, they have to compete with Indonesian businesses. Indonesia is the most populated country in Southeast Asia. They have to compete with Malaysian businesses. They have to compete with Chinese businesses. So by leaving the shores of Vietnam, they find themselves competing with a lot of big players, right? And it just becomes less and less interesting. Now, exports become very interesting under two scenarios. One, you own the brand, right? So when you export around the world, people appreciate that brand. They will pay for that brand. We haven't exported any brand, right? You keep your brand, right? You have a brand called Anthony. You go to Asia. I don't want Anthony's sweater. And you're going to charge $400 for it. But if you don't have a brand, you come to Asia, And it's just a sweater. Okay, I'll pay you $50 for it. Okay, we need to export a brand to keep the high margin. The other scenario we would enter is intellectual property, know-how, some sort of unique product that we're exporting that no one else can copy. I'm happy to do that type of export. For the rest, if you produce furniture, even if you produce phones, you produce computers, it becomes a commodity and you're competing with other exporters around the region.
Yeah, definitely. I think you were saying that if it's very generic, it's just a race to the bottom. So basically, it just cuts the margins completely, and then it's unprofitable, isn't it?
Yes. And the other problem Vietnam will face is that today our labor cost is low. As more multinationals come, you can imagine our labor costs will go up. Right? So at a certain point of time, the businesses in Vietnam may not be competitive to export anymore. People move to Bangladesh, they move to Cambodia, they move to other lower labor cost places. So and we have to face that reality in 5 to 10 years. And it's not an easy one when you're trying to exit your investment.
Yeah, definitely. I guess that's what we're always looking for, is the exit, and yeah, and obviously the profit. So another major risk that you've mentioned just then, and has been very prevalent over the past 20 years, has been high inflation. So while the country has it quite under control at the moment, how would you suggest investors sort of protect themselves from that potential risk of inflation?
Yeah, I think there's two parts to that question. One is, what has generated inflation in Vietnam in the past, and will those elements exist in the future? What we found out is the key element that drives inflation in Vietnam was, one, credit growth. There was a time where the bank system grew credit at 30, 40, 50% per annum. It was putting out too much money and people using it to buy too little goods that created inflation. The second reason was we were in situations where the currency was devaluing against the US dollars. At the same time, we were importing goods more than we were exporting. So we were a trade deficit economy. So we're effectively importing inflation, right? We were importing a lot of things like cars and watches and et cetera. But as the value of your currency goes down, the cost of the automobile goes up. So we were more importing inflation. So that was what drove inflation in Vietnam over the last 20 years. The trade deficit doesn't exist anymore. We are a trade surplus economy. We have about $10 to $20 billion of surplus each year. Therefore, the local currency is actually now appreciating against the US dollars. So that element has gone away. Yeah. The state bank have learned from high credit growth leading to inflation. So they have actually capped the amount of credit each and every bank can have each year. So right now, the average rate of growth for credit in Vietnam is about 11 to 12%. So they know that if they keep it tame, they won't lead to inflation. So the elements that had previously caused inflation are no longer in existence today. So then we face other elements, right? All other elements will create inflation. I think so. I think food will play a role in driving inflation. But the inflation won't be high. It'll around be 3 to 5%. So my recommendation for investors is that you build that level of inflation, 3 to 4%, into your gross IRR. So if you make an investment, so let's say you make an investment and your target return is 20% over 5 years, 20% per annum for the next 5 years. Then you can say, well, if inflation is 3%, then you may go down to 17%. But hang on. Be careful here, because the business in itself can counter the inflation as well. They themselves can raise prices, right? So you may get a situation where I'm actually getting 20 or 23% because my business is adjusting. I didn't get a net of 17%. My business is adjusting. And so as a foreigner, that was saying, okay, I still get my 20%, but did the value of the currency devalue? No, it actually appreciated. And so then I take the local currency, dividend or profit I made in Vietnam, buy the US dollars, but my currency has appreciated, so I get more US dollars or more pounds, I get even a higher return. So in a situation with Vietnam where you find businesses that can adjust their pricing power against inflation, and you have a currency that's appreciating, it's actually a very good scenario for foreign investors to participate in Vietnam.
Yeah, definitely. And it looks like the obviously the trade surplus will probably increase over the next 5 to 10 years as well, which will have, and what's happening in the US with their potential inflation. So In the book, you mentioned ways that people can invest in Vietnam, including your own company, VinaCapital, which is listed on the London Stock Exchange. So can you please expand on sort of other ways that people could maybe take advantage of the high growth you're talking about?
Yeah, from a personal perspective, there are various ways you can invest in Vietnam. The easiest way is to participate in an ETF. There's plenty of ETF in the United States and Europe that participate in Vietnam. But the limitations with ETF is they primarily focus on listed equities, listed stocks in Vietnam. Where our fund, VOF, we focus on private businesses, private equity businesses. If you look at the portfolio, about 70% is in companies that are listed. But keep in mind, we enter these businesses when they're private. We hold on to them now, but we enter when they're private. So what does that mean? That means by participating in our fund, you get to take advantage of the significant increase in value from a private business to a public business. Whereas the ETF, you're binding to the listed. And it's a great way, the ETF is a great way to get access to the listed at a very, very low management fee. Okay, so that's a couple of easy ways. You buy the shares of VOF, and it's liquid. You can sell it anytime you want. Okay, you buy an ETF that gives you access to listed stocks. It's also liquid. Those that have a higher level of risk tolerance and the tolerance to have illiquid asset can invest directly in Vietnam. They can invest directly into real estate or into businesses in Vietnam. So those are other options too. I see a lot of European folks that they like to pack a luggage and travel to places like Vietnam and make investments themselves. They find that very exciting, and that is very much an option.
Yeah, I think you were saying that real estate as well, especially sort of Hanoi and Harriman and other cities, because of the urbanization, it's definitely another potential great investment.
Yes.
Perfect. So on to my last question. So what is the one message you'd like people to sort of take away from the book?
Yeah, I hope by reading the book, they get a little glimpse of some of the challenges that we face when we invest in Vietnam. It's not always, hey, GDP is growing 6 or 7%, so we expect the market to grow that way. There are challenges, but nevertheless, we can deliver returns that are significantly higher than the risk that we take on. And people should notice a country of 100 million people growing at 6 or 7%. So the hope at the end of the day is this book will encourage those that have not heard about investment opportunities in Vietnam to think about, hey, there is opportunities in Vietnam, there is growth, and there's someone who actually have an experience managing investments in Vietnam.
Okay, perfect. So Andy, thank you very much for joining me today. With your book, I think it's released on the 22nd of June.
Yes.
Is it and would Amazon be the best place for people to grab that?
It is. I don't know the exact dates, but if you go to Amazon, it's already there. It tells you can pre-order and what date you can get.
Okay, perfect. Yeah, Andy, thank you so much for joining me today to talk about your book.
Okay, thank you, Anthony. We'll talk to you later.
Talk later.